SoFi's latest price movement raised new questions, and today we're breaking down exactly what the data reveals. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi's trading session today reflected the overall tone of the broader market, showing a pullback that many investors had been anticipating. The stock declined by roughly 2.9%, touching an intraday low around $25.71 and reaching up to about $27 at its high. Total trading volume came in near 66 million shares, noticeably below the usual average of 79 million. Lower volume often signals caution in the market, with traders waiting for clearer direction before taking larger positions. Before the market opened, sentiment was already leaning negative due to a series of weaker trading days leading up to today. On top of that, the latest macroeconomic data added more pressure. Initial unemployment claims came in at 232,000. Although this number was better than the forecast of 254,000, it still missed the consensus estimate of 223,000, giving the market an unclear, mixed message. The ADP employment report also showed a weekly decline of 2,500. Even though this was better than last week's reading of negative 111,000, it wasn't strong enough to shift sentiment into positive territory. Because the economic data leaned toward the weaker side, expectations for a rate cut at the upcoming December 10th Federal Reserve meeting increased, now sitting near a 50% probability. Markets generally prefer slightly negative economic indicators, not catastrophic, but soft enough to push the Federal Reserve toward easing policy. Today's data fell into that category, contributing to the anxious mood early in the session. Adding to the uncertainty, a new survey from Bank of America reported that roughly 45% of fund managers see a potential rate hike in 2026 as the biggest risk on the horizon. This unexpected headline introduced more hesitation into the market, as it suggests that monetary tightening could return in the longer term. For the short term, however, the market continued to focus mainly on upcoming rate decisions and economic conditions. Despite the rough start, the second half of the trading day brought recovery, and SoFi followed the general market rebound. Another development that added support was a corporate update hinting that a dividend that was originally planned for mid-2026 could potentially be introduced earlier. Dividend-related news typically signals stability and confidence to investors, which helped improve the mood surrounding the stock. Global headlines also played a role in pushing the market upward. A meeting involving Saudi Arabia suggested that a previously announced $600 billion investment plan could expand to a full $1 trillion. Such large-scale international commitments often boost investor confidence, especially across growth-oriented sectors like Fintech. Looking forward, the next couple of days will be extremely important for the broader market. The release of the FOMC minutes is set for 2 p.m. tomorrow. Investors will be paying close attention to how many Federal Reserve members are supporting multiple rate cuts. The last time minutes were released, several members leaned in favor of reducing rates more aggressively. These minutes could heavily influence short-term market direction. NVIDIA's earnings report is another major event that could move the entire market. Semiconductor earnings frequently influence technology sentiment, which then impacts financial names as well. Following that, Walmart's earnings, expected the next morning, will offer insight into consumer strength. These three events combined have the potential to shift market momentum drastically, and SoFi will likely respond accordingly. On the company-specific front, there were no new filings, news releases, or major social media-driven discussions about SoFi today. The stock's movement was almost entirely tied to broader market trends. Short sellers returned around 120,000 shares today. SoFi's current short interest stands at about 9.48%, or roughly 112 million shares. When shorts return shares on a red day, it typically signals that the decline wasn't caused by new negative news. Instead, it suggests the movement was more psychological and macro-driven. Examining the options market, call volume reached about $40 million, while put volume touched $22 million. Total options activity, roughly $61.7 million, was noticeably lower than recent sessions, which had ranged from $70 million to over $150 million. Lower options activity often reflects uncertainty. Despite this lower activity, around 45% of all options were still bullish. Call buyers were generally targeting prices between $26.50 and $28 for the near term. Bears aimed for levels between $26 and $27, showing that upside expectations were slightly stronger than downside fears. Institutional activity revealed an important detail. Even as SoFi recovered intraday, many institutions were selling. This was likely a key reason SoFi lagged behind other fintech stocks today. Competitors like Upstart, Robinhood, and Webull showed stronger moves upward, while SoFi moved more slowly. This suggests that institutions may have been taking profits or rebalancing positions based on technical factors. Dark pool activity was relatively quiet, with only a few large block trades in the range of 4 to 5.5 million shares. Short selling indicators also showed little activity, meaning hedge funds and algorithmic traders weren't aggressively pushing the stock downward. This again reinforces the idea that today's dip was not driven by any SoFi-specific catalyst. Technically, SoFi is currently trading below its 50-day moving average, while sitting between the 50-day and the 100-day averages in a wedge-like consolidation pattern. Strong support appears near 25.20s, with a deeper support level around 22.83. On the upside, resistance is visible near 20.60-66, and then again around $20.03. These levels will be important in the coming days as volatility increases around economic and earnings events. Unusual options activity also revealed something interesting. A $42 call option was sold, most likely as part of a covered call strategy by a large institution. Even though the premium collected wasn't very high, it shows a willingness from institutions to generate income while expecting the stock to remain below that level in the short term. Meanwhile, another large bullish trade took place when an institution sold a $23 put expiring in April 2026. This indicates confidence that SoFi will not fall below $23 over the long run. Compared to many other fintech names, SoFi has actually performed relatively well in recent weeks. Several fintech stocks have already dropped below their 100-day moving averages, showing significant weakness. SoFi stayed stronger for longer, and today's pullback looks more like a delayed correction. The stock's stochastic RSI is now deeply oversold, which could set the stage for a potential bounce if upcoming macro events align in its favor. In summary, today's movement in SoFi was shaped almost entirely by external factors, broader market volatility, and institutional flows. There was no negative company-specific news. The key drivers in the upcoming days will be the FOMC minutes, NVIDIA's earnings, and Walmart's earnings report. These events will likely determine the next major move for SoFi, especially as the stock approaches key support and resistance levels while remaining technically oversold. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.